I had chatted with Karen before, just because I usually like to put clients in touch with her, and she said something that was interesting to me. She said 50% of people that do 1031 exchanges do not need to do it. So that's one thing that I want to just say to people. True. Hey, I know that there's so much talk about it, and it's awesome, and you can get more properties, double your portfolio, however you want to do this with a 1031 exchange, but talk with your accountant. Because you may be in a situation that you do not have to do a 1031 exchange and put that pressure on yourself.
A lot of these people, the complexities of a 1031 exchange ultimately aren't worth it. When I have a client considering it, the first thing I tell them to do is talk to your accountant and find out what happens if you don't.
Yeah.
And the accountant will email them back, well, you're going to owe a tax bill of $8,200. And they go, I'm not going to rush into some deal that I wouldn't do otherwise over $8,200.
Yeah.
Welcome to the Build to Rent podcast, the first ever real estate show dedicated exclusively to helping investors go from raw dirt to a cash flowing rental property. Whether you're looking to do a massive syndication or a one-off rental property, the Build to Rent podcast will help you get there. Our hosts, Steve Olson, Chase Levitt, and Sherida Zanger, bring together more than 4,000 properties of experience as they break down how to find and finance projects, make the most of market and tax strategies, and maximize the returns of a build-to-rent portfolio. This is the Build to Rent podcast. And now, today's episode.
Welcome to the Build to Rent show. Steve Olson here with Chase Levitt and Sherida Zanger, with a timely topic. If you're in the build for rent space, whether it's you, whether it's your investors, you're going to get these questions about 1031 exchanges, right? It's such a tremendous source of capital in the real estate world. And it's actually always there, right? Somebody's always doing an exchange, whether the market's pure mayhem, whether it's a little bit slow, these exchanges come up. People got to deploy money. They got to get it out there. The tax consequences are going to be pretty brutal. There's been all this talk in some of these new laws getting passed or proposed by the new presidential administration about should we get rid of 1031 exchanges. I'm not an expert on it. It seems to be the usual banter. It's been dying down a lot. They love to bring it up, but I don't know that it's gained any significant traction. Have you guys heard anything on that?
I haven't heard anything in a while.
Nope.
I was weirded out.
It was a big concern in a lot of people's for a while.
Yeah, that and different rates and things like that. So 1031 exchanges appear to still be here. So what was funny is a tangent is they were talking about. Did you hear they wanted to talk about taxing unrealized capital gains? I don't even have words.
Wow.
Yeah, I mean, what would you do? How do you even administer that? I don't know.
They'd figure out a way.
Well, they'd figure out a way to do it terribly
Yeah.
and make it counterproductive and crash the economy. But I mean, seriously, like I looked at my TD Ameritrade account today and I made like $200 in Apple stock today. So when do I pay? Or how? Or what?
Yeah, because maybe you could lose that all tomorrow.
That's the point I made to somebody.
It's is this a yearly thing? Is this a monthly thing? Is this a daily thing? I mean, then you're going to pay me back when I lose, right?
And they don't plan on doing that?
No.
Like, are you going to send me a check when I send you my statement of loss? Oh, you lost, and you're like, it was not a serious proposition.
Doesn't even make sense.
Sounds like a nightmare.
Yes, that's correct.
Yeah.
That's correct. Okay, so well, we had to talk about that one. I think everybody agrees with that one. That was a stupid idea.
Yeah.
Oh yeah.
If you think it's a great idea, you probably don't listen to this show. So 1031 exchanges, of course, there are many rules and things associated with that. We're not here to talk about that. That's for you, your accountant, your 1031 accommodator, right, to go over and make sure that you're compliant. But there can be some unique intricacies to it that we've found on the build for rent side when it comes to when you close on new construction, what do you actually own and when do you own it? And how does that apply? Does one of you want to dig into that a little bit and what people should be thinking about there?
So I think one thing that makes us different, when you're closing on new construction, you're actually taking title to the property. So that's one of the key things in the 1031 exchange is you have to take title to that property within that 180-day mark.
180 days of when?
Of when you closed on the departure property. So the property that you sold, You have 180 days to actually close on the property that you're acquiring. You have 45 days to identify a property. How deep do we want to go in here? Because I don't want to get myself in trouble.
Well,
No, this is good though.
disclaimer.
And it gets a little bit tricky when you're buying a new construction multifamily property, right? And so you have to time that accordingly.
And so we're pretty good with people saying, hey, if you're going to do a 1031 exchange, talk with us. We recommend you use our accommodator, Karen Weeks at United West Title, because she's phenomenal. But talk with us because we don't want you to identify something that ends up not being a property.
Yeah. Does there have to be a CFO in order to 1031 exchange into it?
No, because you're taking title.
Yeah.
So you're taking title. And again, you're having the value. So whatever you sold your property for, less some commissions and title fees, that's what you have to replace it with. So usually most of our investors are maybe buying 2 or 3 or 4 more of our properties because they can take the land value when they close and then some of the construction depending on how far we're going to get into it. So that's one of those things we always say to people. If you're going to do 1031 into something that we do, talk with us first. Let's chat with it because you're not going to be able to sell something for $850 and buy a fourplex from us for $900 and fulfill that exchange within 180 days. It doesn't work. That doesn't work that way. But we can accommodate exchanges. We're just going to have to split the money out a little bit because you can divvy out how you do your money. I want 30% here. I want 20% here. I want 50% on this other property.
Well, as I understand it, it's ultimately about proving, like we said, what you owned and when you owned it, right?
Yeah.
So, I mean, some people take a gamble. They say, I'm going to buy this property for $1 million, right? And even though it took 18 months to build it, I'm still claiming the whole $1 million because I'm going to get audited maybe in 3 years, and good luck proving what I owned and when I owned it. But that's actually on you. You've got to prove it. So I think they're probably just planning on saying, here's my closing documents and what I paid. Mm-hmm. I don't know if that holds water or not, and I'd prefer to never find out, right? But the best part being is, well, take what you paid, and if you've got copies of approved loans and vertical budgets, you could probably, any reasonable person, and by the way, like 50 CPAs have agreed with us on this, you could subtract that vertical budget from your overall price and get to a land value that way. Could you not?
Yeah.
You could, yeah.
So have at least the land value.
And out of the 10 years we've been doing this, have we ever had anyone that's done a 1031 exchange into new construction? I don't know yet. My client, I haven't personally, and I've done it. I've had some clients, they have not been audited yet. What
And I
about
think
you guys?
another thing that can help as a safety net for them, if they want to make sure they play by the rules, we obviously have bank draws, right? So if you're kind of trying to get as much out of it as you can, we have monthly bank draws. So you'll be able to say, okay, so here was my land, but I've had 5 draws that equaled $150,000. So at this point, my property was worth X because of the land value and the draws.
Well, and I think you're talking about what I've heard referred to as a build-to-suit exchange.
Correct.
And I've heard it called a bunch of other things. There's so many kinds out there, and I never know. We should get a really good accommodator on the show and interview them. Karen, yeah. I don't think she'd want to be on the show. I don't think it's her bag.
twist her
Yeah, she'd be awesome though. She's great.
Well, go twist it. Let me know what she says. But I mean, in this case, you say the accommodator creates a temporary entity that takes the title. Right? So you sold your exit property on January 1st. So by the letter of the law, you have 180 days. That's June 1st, right?
Roughly, there's, whatever.
February ruins everything.
Yep.
So, but let's just call it June 1st. So you have until then to close on the replacement property. So in new construction, the rationale being, well, what if I closed on dirt on February 1? So now I have 5 more months to do construction and build value into this property above and beyond the actual land value, right? I have that period of time. So, but the title company has to take title through that. It's called an EAT. I can't remember what that stands for, like an exchange asset, something like that. There's an entity, a specific kind they use. And so then you come in towards the end of May and you actually close at that point. That's when Chase Levitt shows up on title, because Chase Levitt exited title in January, shows up again on the new property at the end of May, he's going to take that land value and add up all those bank draws that Sherrod had just talked about, and that's the value he claims, right? And that holds water. But anyone want to tackle the problem that can create on financing? Anyone feeling lucky?
A lot of lenders don't like it. I think we found 2 lenders that will do it because most of the time it's held in an LLC. So first of all, they don't like that. They want it to be you on the line, right? Not your LLC. I'm trying to think. We're doing one in Idaho for a client of mine right now. The bank was actually pretty cool with it, but he has already closed on his departure property. He has his funds. He's good to go. I think we're going to eat most of it up just in the first draw alone. So I think he's fine. But he had to be on title and the LLC. I know Karen
he had to
was involved in
guarantee it.
Yep. Yeah.
Yeah. It seems like it's a lot easier on a commercial finance deal.
Yeah.
I mean, whenever you drag Fannie Mae into something, it's going to complicate it.
Yeah. And most of the time you're doing it in an LLC anyway.
Yeah, I think every time.
Yeah.
It has to be. And that's the point where you could actually, because on a conventional loan with Fannie Mae, you can't have a reasonable conversation with Fannie Mae. Oh, here's what I want to do, and it really makes sense. They're going through, well, it doesn't say it in the book.
Yeah.
Right. You're dealing with a robot. But on a commercial loan, you're talking to a loan officer who can talk to a loan committee who can say, we want to do it this way and the other. And they approve it on a case-by-case basis, right? So this kind of situation would be reasonable. They would understand that. So I don't think that you're going to be able to get away with a build-to-suit. I'm not sure anyone ever has on Fannie Mae financing. Do you know anybody?
Not that I can think of. I think the other thing that is out there, it used to be that with 1031 exchanges, it had to be like kind. Yeah. And that was such a hang up for a lot of people. Well, I sold a condo, so I have to buy another condo. And that's not the case either. So you can sell land, raw land, and then buy a fourplex. You can sell an apartment building and buy some single family homes. It just has to be in the same realm, right? I know that there have been exchanges. Again, this is just what I've been told, so don't hold me to it. But people have exchanged into houseboats down at Lake Powell, done a 1031 exchange into a houseboat. So, and I know that I was actually talked to Karen about a gentleman that I know that wanted to do an exchange into an airplane. I don't know how that worked and what they ended up figuring out, but I know that there was some kind of an exchange going on that way.
Can we talk about the numbers just a little bit? Let's do an example, because I think there's some misconceptions out there on the amount of what people need to exchange that I get asked on every now and again. So let's say investor Bob comes to you and says, hey, I sold my duplex for $500,000.
Okay.
I bought it for $300,000. So I ended up making $200,000, right? How much would investor Bob need to exchange? Because oftentimes I have that investor that will come to me and say, okay, I need to exchange $200,000. Is it the $200,000? Is it the $300,000 that he owed on it? Is it the $500,000? Let's just talk about that real quick.
So my understanding is it's whatever you sold the property for. So the $500,000 less title fees and commissions is what he would have to replace. There is a big misconception because people say, oh, it's only on my gain. It's not. It's on what you actually sold the property for. You have to then replace that value.
Yeah, that's right.
So let's say less commissions. Let's say ends up
say $475.
$475. So he needs to find you're telling me he needs to find another property for $475
at least
or more.
Correct.
And it's easy when the property's already built, right? Because you know what you're going to purchase that property for. So I think is what we've been talking about here is the new construction and figuring out what the costs are. So basically is what you need to do. You can 1031 exchange into new construction. We went over this, 5-10 minutes ago. Just find out what the land value is and that construction value, and it needs to equal for investor Bob at least the $475 at the time of his 180-day mark. Correct.
Or he could split it into two. So sometimes we'll say to an investor, hey, you may want to buy 2 fourplexes because we can eat that value up right on that first draw alone with the land value.
As long as you get to that overall exchange amount that needs to be achieved. Yeah.
And here's another thing. When you're identifying a property, so you can identify up to 3 properties, right?
Yeah.
If you identify 4, you have to buy all 4. If you identify 3, you can buy 1, 2, or 3.
Because you have to identify within 45 days of your exit. And that's there so that people don't say, and I identify the whole world.
Yeah.
Right. There's no way to, you can't prove you're in good faith trying to do a 1031 exchange.
Yeah.
Okay.
So plan ahead. I think the biggest thing is plan ahead, understand what you're going to sell the property for. But even before that, understand what you want to go into. And if it's new construction, understand your time frames and your deadlines. Know that you need to take title, right? And understand when that's actually going to happen, and maybe plan for a little bit of buffer. We've been talking about on our episodes lately that there's a lot of delays going on. So maybe give it at least more than probably 1 to 2 months, maybe 3 or 4, in case things fall behind a little bit and you can't take title when you were planning on it.
I know one thing that we've done, because our contract says it will be completed within 12 months, right? So we've gone over on that, but we've had some people that have said, hey, I have my 1031 exchange. I have to close by my 180th day deadline. You guys aren't quite ready for me to close. So can we work something out? And usually we've said, okay, yes, we'll let you close, but we're going to write an addendum to your contract that says your 12-month, right? Our builder's not going to be responsible for any,
clock's not ticking yet.
Exactly. It doesn't click until the building next to you starts construction. The other thing that Chase had brought up with, hey, this works for new construction. It works for new construction if you're taking title to the property, because there's a lot of new construction out there. The average home builder, you can put it under contract, but you're not taking title to the property once you go under contract.
A lot of times it's at C of O.
Yeah.
Once
and
it's finished.
our people are carrying the construction loan. So that's what makes it unique and makes the 1031 work, new construction with us.
Sooner than later. Yeah.
Yeah.
Yep. Good point.
Well, this is something that you talked about a couple of episodes ago when we were talking about valuing a deal, right? What is somebody willing to pay for a deal? What is it worth? And one of the big points there is they could have a huge tax consequence. So the uncertainty of new construction in a build for rent deal sometimes isn't worth it on a 1031. You're saying, I'm going to have a $300,000 tax bill if I don't close by day 180. You know what? That attractive cap rate that comes with brand new construction may not be worth it to you. You may say, I'll take a 4.5 cap rate because I know I am saving that giant tax bill and I get a moderate return on my money along with it, right? So when you're doing that build for, you got to consider it. All these logistical, these supply chain, these labor things, it's harder and harder and harder. I think they should lengthen the time period for a 1031 exchange. But I don't know. Maybe I'll go pick it on the steps of Congress or something with literally everybody else. I think everybody's there right now.
Yeah, give us a little more time, especially right now in the climate we're in, right? Everything's taking longer.
And I think they did that at the beginning of COVID, didn't they?
Yeah, they extended something.
I think they pushed 1031s out. They gave everybody a little more time, which was cool. Mm-hmm. I think that was a good idea. It really helped the market. But just increasingly 6 months doesn't seem to be like enough time.
No, you
it's
can't
hard.
get a lot done. And we've been pretty flexible with people as well, saying, hey, let us know and wait to close on that departure property. You can put it under contract. Just make your close of escrow closer to when you're going to close on one of our properties, right? Because we want to give you as much of that 180 days as we can give you. I know that doesn't always work out, but again, talk to us. We can help walk you through this.
Yeah. If someone came to me with the 1031 exchange and said, hey, I want new construction, I'd say it's probably not going to happen. We're not going to start soon enough for you.
Or are you flexible? Can you wait a year to sell your property?
Yeah.
But if it's already,
if it's already sold, saying I have money in my bank or with the accommodator,
yeah,
let's find something that's already existing then.
And it may be just something, I know Chase had mentioned this in another episode. Hey, maybe this is just something as a placeholder, right? I'm going to put my money here. It's an okay investment. Maybe I'm getting a return. Maybe I'm breaking even.
Getting that tax write-off for the year.
And I'm not having to pay the capital gains on it till the next property comes available, right? Something else that I can put my money into.
Right.
Again, you have to be smart, but
you
may just want to placehold it somewhere.
You think about it. If the government wanted to facilitate more new construction, and especially like affordable housing, which has so many strings attached, it can be difficult. One possible way to do it, I'm getting a little academic here, is lengthening the exchange period if you're buying that kind of property. That would move a lot of this 1031 money, which we talked about at the beginning of the show, is always out there circulating. You could push a lot of that in the right direction of whatever kind of housing you wanted to create. And should I handle that at the Capitol when I go there?
Yeah.
Okay.
Make a few signs for that.
Yeah.
I had chatted with Karen before, just because I usually like to put clients in touch with her, and she said something that was interesting to me. She said 50% of people that do 1031 exchanges do not need to do it. So that's one thing that I want to just say to people.
True.
Hey, I know that there's so much talk about it, and it's awesome, and you can get more properties, double your portfolio, however you want to do this with a 1031 exchange, but talk with your accountant. Because you may be in a situation that you do not have to do a 1031 exchange and put that pressure on yourself. So
we need to get him on the show, but I've had that very same conversation with Mark Kohler, who's the most entertaining CPA there is, right? He's the only guy that can make taxes fun. But he told me that same thing, that like a lot of these people, the complexities of a 1031 exchange ultimately aren't worth it. When I have a client considering it, the first thing I tell them to do is talk to your accountant and find out what happens if you don't.
Yeah.
And the accountant will email them back, well, you're going to owe a tax bill of $8,200. And they go, I'm not going to rush into some deal that I wouldn't do otherwise over $8,200.
Yeah.
Right. So that's a good point. And I should point out that Karen is a real person. She is our title company and 1031 accommodator. She is not the stereotype that has emerged of the naggy lady who wants to enforce the rules on everybody.
No, Karen's the cool. she's the good Karen.
Yes.
She's the Karen before there was a Karen.
I mean, some people are saying like Karen is like a new racial slur almost. I mean, it's quite the insult to be called a Karen. So I've had this conversation with her. She hates that's her name right now. Who chose that? I mean, so
she's awesome though.
She's the best. Yeah. I just kind of a funny tangent along this topic. I was talking to a client, this is like 6 months ago, and they kept saying, yeah, I've got to do this 1033 exchange. And I just kind of let it slide. And they kept saying 1030. I'm like thinking, you don't know what numbers are, right? You don't understand. Oh no, I don't understand. I learned all about a 1033 exchange. And if you go, it's starting at section 1030. There's all kinds of exchanges, 1031, 1032, 1033, 1034. For our weird trivia, 1033 is what happens in the event of eminent domain.
Oh.
If the government says, Preston, we are taking your house. It is in the public interest that we need to put a power line here. So we own your house now, and we're going to pay you fair market value, which rarely has somebody who has been on the receiving end of this thought they got fair market value, right? That's a big topic. So now here's this money. He actually has a lot longer. The timelines for exchanging in a 1033 are much more generous than in a 1031.
That's interesting. I wonder if that's the same thing. I had a client that was talking to me about the fires in Paradise, California, a couple years back. Yep.
Yes.
And she had said, I think she had a year.
Yeah.
Like it was, and I kept thinking, does she know what she's talking about? And then I looked it up. So I wonder if it was also if it's the 1033, that's the same.
Yeah, eminent domain. So it's condemned or disposed under threat of condemnation. It's probably that. If not, it's going to be 30. 34 is the sale of stock. I learned that.
Yep.
It's if you're a nerd like us, you might enjoy reading about that. So, okay. Everybody, thanks for listening. We'll catch you next time on the Build for Rent show.
Thanks for listening to the Build to Rent podcast. You are now just a few clicks away from joining our community of Build to Rent investors. All you have to do is follow our show on Facebook, LinkedIn, or wherever you're listening to this podcast. You can also watch this episode and more by subscribing to the Build to Rent podcast on YouTube. The information presented in this podcast is general in nature. Nothing in this presentation should be construed as financial advice or recommendations for any particular situation. The hosts are only licensed to provide advice and services in the states where they are specifically licensed, and listeners should seek the advice from an appropriately licensed professional in the area where they invest. The examples presented in this presentation are for illustration only, and no guarantee that similar results can be achieved, since the facts, circumstances, and participants are all different.